And we've got Heron Resources Limited, and Wayne Taylor, Managing Director, will be presenting. Wayne has more than 25 years worth of experience in the industry. He has a mining engineering degree from the University of New South Wales and an MBA from the University of New England. He's held senior operational management roles with WMC and Glencore, including managing Glencore's global base metals business development effort out of Australia. Wayne joined Heron's predecessor, Troy Osman, in 2011 as Chief Executive and Managing Director, and was appointed to the same role with Heron upon its merger with Troy Osman last year. Wayne, over to you. Thank you.
Thank you very much, Joe, and thank you for being here to listen to the Heron story. I'm going to talk about the Woodlawn mine site, Zinc-Copper Project. We've got an aerial photograph there. It's circa 1996, I think. It's still probably one of the best aerial shots that we've got. Just a couple of points of note. The tailings dams I'll be talking about in the top left there, 3 of those. The underground ore body that we're looking at progressing basically starts at the open pit and heads off to the right there, just underneath those water ore bodies. Water bodies, sorry, not water ore bodies. The plant site there was decommissioned and cut up and taken away 1999, 2000, so we've pretty well got a blank sheet of paper here when we go and look to redevelop. Our forward-looking statement and compliance statements. I'll leave those for you to look at your leisure. I guess, as mentioned by Joe, this project came from Troy Osman and came into the Heron stable through a merger that was completed approximately 12 months ago, 6th of August. So we're just coming up to that date now. So my pleasure to take you through the work that's been done since. It was very much a merger of cash and a good project. And given that cash, it's given us the ability to take this project forward and create some very encouraging and exciting results. The project's located in New South Wales. Site visits, I often catch a train down to site. We catch the Canberra line. It stops within about 6 k's of the site as a crow flies. A bit unusual, and we'll talk about infrastructure at our fingertips. It's pretty well second to none. So we're about 2.5 hours drive if you want to drive out of Sydney. We're about less than an hour's drive out of Canberra. High-grade deposit, a great operating history here to get comfortable about what the project's capable of. Our primary commodity is zinc. We've heard a bit over the last couple of days about the forecast for that commodity being one of the strongest certainly out of the base metal complex. We've got established resources here and reserves. The 2 sub-projects, we've got the tailings side of it, which is a much more advanced project. It was considered as a standalone a few years ago, so there's an existing feasibility study on it, so really well understood. The underground, which is high grade, has always been the real prize here, but remained earlier stage. So through the merger and the ability to utilise Heron's treasury, we've looked to advance that as quickly as we can, and a lot of what I'm going to talk about is that first stage of work on the underground. We've got a granted mining lease here. It's just been renewed. We also have state government approvals in place for both projects, so in the context of are we permitted, the answer is yes. Excellent infrastructure. I've got a slide on that. It is one of those things you can only really appreciate if you come to site and have a look. Corporately, we're dual listed. We're on the TSX and the ASX. We've got a market capitalisation at the moment of about $40 million, cash of $24 million at the end of June, so a substantial amount of cash for the market capitalisation. A few listed investments as well. In terms of our share register, about 27% of our stock is held in North America, the remainder down here in Australia. Board and management, without going through the individuals, it's fair to say that we've got some great breadth and depth when it comes to base metal mines and all the aspects that are required to take a project through from exploration right through to construction, commissioning and operations, including right down with the recent appointment of Andrew Laurie as our COO to base metal tailings retreatment projects. So very, very pleased with the skill base that we have, and we'll continue to add to that as we advance the project into a development stage. I've only got one slide here on the zinc market and the fundamentals. It is a story that's fundamentally driven. The chart there shows the declining LME and Shanghai stocks. From the last 2.5 years, it continues to decline. We're all well aware of the closures that are coming up with Century and Lachine. It is a supply side story rather than a consumption side, but in saying that, consumption's up 2.6% this year. So despite what we hear about the likes of China getting weak need and so forth, we're still seeing increases in consumption. So mine supply, less than usage, and that's right up to the last 3 consecutive months, according to the International Lead Zinc Study Group. There's not a lot of projects around when it comes to zinc. It's been very much a forgotten commodity for quite some time. So this operation or this project presents a very viable development case. I don't need to tell you about what forecasters are saying about zinc, but all consistently agree that we're in for much stronger commodity prices than what we're seeing today. I've got a couple of charts here. I mean, these are uncommissioned and independently pulled together by Paradigm Capital, a group that provides coverage on us out of Toronto. And it sort of sets the scene for Woodlawn compared to a number of peer zinc potential developers of zinc projects in their sphere. So this chart here shows where we sit compared to a number of other projects and companies on a zinc equivalent grade basis. Now, one of the issues we've always had is that when we talk grades, we're talking zinc, we're talking copper, lead, silver and gold, and people do struggle to make sense of it. So where possible, we're trying to talk about zinc equivalents. It does take into account recoverabilities, payabilities and so forth in the calculations to make sure that we're giving a reasonable reflection. So as you can see on that chart, we rate very well against the peer group. We can also take some comfort from the fact that the historical production there, nearly 14 million tonnes, we're talking 9% zinc, 3.6 lead, 1.6 copper, half a gram gold, did I say 1.6 copper? 74 grams silver. So a very high grade metal mix. It is a mouthful. And as you can see, when you combine that into a single factor, it rates well. The second benchmark chart is a metal equivalent. So we're looking at pounds of zinc. So we've got about 4 billion pounds zinc equivalent. So we're about mid-pack. And I guess when you combine that with the high grade that we have, along with a number of other project features such as permitting and infrastructure and so forth, it really does put us up that development potential curve. We've been through our first round of study on principally around the underground, but on a combined project of the tailings and the underground, with the focus on the underground to bring those components up the study curve. That was through a Canadian structured document called PEA, Preliminary Economic Assessment. You'll see that referred to a number of times through the presentation. Through that study, we've developed a production target through some fairly detailed work, and the sort of numbers we're looking at are around 50,000 tonnes of contained zinc, 10,000 tonnes of copper, 16,000 tonnes of lead in 3 separate concentrates with reasonable silver and gold credits in both the copper and the lead concentrates. So it's certainly a meaningful level of production. The PEA, this preliminary economic assessment, that allowed us to develop some bottom line business case numbers, as presented in the slide here. 46% IRR post-tax, a very strong result. Some C1 and C3 C1 cash costs, C3 total cost numbers there. They are post byproduct credits. We do get some reasonably significant credits from the other metals, referred back to a zinc number. So great economics, and certainly given us the impetus to take this forward to the next step. sensitivity chart on the right there, what it shows us is that this project can withstand fairly significant variations in a number of the input factors and still remain where you want it in a positive position. So since the merger took place in August last year, we hit the ground running with a couple of drill rigs. We put in about 7,600 metres of diamond drilling, 1,200 of RC, and delivered the PEA study in about 8 months' time. An incredible amount of work, and I'd certainly take my hat off to our people internally and also the consultants that assisted us through that. It was a lot of work to get done. It was on time, it was actually under budget. Through that we've defined a lot of new mineralisation, certainly a brand new resource that's given us a lot of confidence about what it is that we're going to be looking at when we get to the underground environment. Mine planning, a lot of geotech work, paste fill work sitting behind that. The first metallurgical test work done on the underground mineralisation since the operation closed in 1998, and also the first and successful test work on a combination of both tailings and underground mineralisation. In actual fact, we got better recoveries out of the combined ore types than we did from the separate, so very pleased about that. More work to be done. The PEA is akin to a very detailed scoping study. It's about a 300-page document. It is available on our website and also on CEDAR. The plant design, it has been designed as a single plant. It's very similar in terms of flow sheet to what was in place for the previous operation, so we're not looking to do anything drastically different. One key thing is the incorporation of fine grinding technology. So what is key to recoveries or getting enhanced recoveries out of this ore, including the tailings, is getting the particle sizes down. Certainly down below what you'd typically get out of a ball mill, but not into the ultra fine grinding realm. Business case we've looked at compelled us to move forward with a feasibility study. That's a 12-month program, so we're looking forward to what we're going to deliver over the short term. It's fully funded. It's $11 million cost. Clearly we've got the cash to see through that. In the meantime, we've been looking, given that the tailings project is I guess in an advanced state, whether or not we have the capacity to generate the interest to see an early start. That early start could see us delivering product to market 12 months earlier than following the feasibility study through and then following the development pathline. The outcome of that work, I guess we'll see where that lands in the next couple of months. One thing that we have just done recently, and I'll talk about it, I think it's the next slide, is a transaction with Greenstone Resources that will certainly bolster our cash position, but there's rationale behind that. And that's something else that I guess we're very pleased to have got under our belt at this early stage. Following completion of the feasibility study, so that'll be in the first half of next year, we've got a construction and commissioning period of around 18 months. That would see us into production start of 2018, and that remains the baseline target for us, with obviously the ability to pull that back somewhat if we get the stage development away. So the transaction with Greenstone, we signed this up about a week and a half ago. It's broken down into two components. There's a $6.8 million placement there under our 15% issuance capacity at 12.6 cents. The second component of 13.2 million is there under a potential stage development approach at Woodlawn. The relationship that we've established with them gives us access to both their technical and commercial expertise, and they'll get to nominate a director for the Heron board. I guess what's quite unusual about this transaction is that it's purely equity. There are no other hooks in it, and it was done at a premium, which is quite unusual in the current market. These guys did an extensive amount of due diligence on us, and I guess like the way we see that is a bit like a fitness test, and I can only suggest that they thought that we were healthy enough. Very pleased to have them on board. It's certainly a stamp of approval for the project to take this early stage position. It's a bit of a cornerstone, and that gives us some confidence, and hopefully the others some confidence that this is real and it's going forward. Down to some nuts and bolts on the project. One of the key things we wanted to do was look at the resource and look at the resource in the upper levels. On this image, you've got the open pit. In the background, in the grey, you'll see the old former underground workings. They went down about 620 metres below surface. The coloured areas signify a heat map for the new resources. What is significant about them is they're primarily away from the old workings. There's a little bit that sits in and around it, around the old workings, but primarily away from it. Right in the very centre is Caitlin's. We'll talk about that in particular, as it was a new discovery. So when we talk the PEA and the resource base that we have feeding into a mine, I guess an estimate of what we think we can mine out of it, we have the underground, which is about 6.5 million tonnes of resources. It's split between polymetallic, which runs at about 20% zinc equivalent, and copper mineralisation, being VMS. We do find some copper zones, and that runs at about 10% zinc equivalent. The tailings, we've got 11.6 million tonnes of tailings there, running about 6% zinc equivalent, which is akin to a grade that many are looking for actually in the ground. Caitlin's. So this is about, the centroid of this particular lens is about 350 metres below surface. So the genesis of this was, it was an EM target in 2012. We put one hole into it under the Triosman banner in 2013. The merger took place, and as part of the PEA we put another 10 holes into it. We now have 500,000 tonnes here at 22% zinc equivalent. We've got the image shows a grade width isopack, and in the purple area we've got a result that we released this morning, 34 metres. It's actually the widest intercept we've received to date, 34 metres at 20.8% zinc equivalent, so best described as a stonking hit. We've got a few other very high grade hits. These positions, or the drilling that we're doing right now, which is part of the feasibility study, is both expanding the long section view of Cape, but also the width. We've picked up quite a number of quite wide intercepts here. Very happy with the way that this particular position is growing for us. On the right is a picture of some core. This core, some of it's available in our booth if you want to get up close and personal with it. This particular hit was outside of the current resource boundary, and it was a 20.5 metre hit at about 20.7% zinc equivalent. The conversion to a true width is about 90%. So very pleased with the way Caitlin's is going, and we continue to look forward to seeing that get expanded. As part of the feasibility program that we've moved into, whilst we drilled 7,600 metres for the PEA, we've got 19,000 metres in the drill program for the feasibility study. Three components there we're looking to achieve. One is obviously infill and upgrade the resource categorisation of a number of positions here to at least indicated. We're testing a number of extensions, as you saw on the previous slide, in and around Caitlin's, looking to expand that resource base. We're also testing some conceptual target areas. Caitlin's was a new discovery. It was literally a drilling shadow 90 metres away from existing development, and it just clearly shows that this system has more to give. And our geologists are exceptionally excited to be testing a number of these conceptual targets. We're being ably assisted by downhole EM here, so it's not a shot in the dark, and that particular technique is proving to be quite valuable to us. From a regional context, so we're shifting to the image on the right. The Woodlawn mine previously sourced production from a number of satellite areas. Karawang to the very north there is about 9 kilometres away. 500,000 tonnes came out of there at very high grade. We have a surface EM target there along strike of previous mineralisation, something we'll test in the next few months. Cowley Hills is another underexplored area. We know there's massive sulphides there. Small tonnage was mined previously, so certainly proof that there's more material around. It's taking more of a back seat, the regional side. We've got plenty happening in the mine, but it's certainly there on our radar, and we'll get to it down the track. Resources are only good if you can wrap a mine plan around it. So this is some work that was done by SRK as part of the PEA. What we have here is designed stopes, both in green and orange. Behind that is the blue development trace, so an extensive amount of decline development there, level development. There's not a lot of expected usage or reusage of the previous workings. The centroid of this stoping material sits out to the west, and it makes more sense to put in development specifically for it. The difference in the colours that you see there, the green is considered to be new stoping areas not impacted at all by previous operations. So, this is the non-remnant component, if you want to call it that. The orange areas in around the old workings, more of a remnant nature, but bearing in mind when this operation closed in 1998, it was overnight. There was a mine plan to see this operation continue to produce, and basically it was down tools. So there's a reasonable expectation that some of these areas will be accessible, but in saying that, in the work that we've done to date, it's only 20% of the underground mine plan. Scheduling of this gives us an underground mine life of 67 years. It is what we consider a starter case, so we're doing enough work on this to get the underground away. Combined with the tailings, we end up with about 11-year mine life, and that's a great position to start from. The production concept here, it is, as I mentioned, a combination of both the underground and the tailings. So the WUP is Woodlawn Underground and WRP is Woodlawn Retreatment. A 1.5 million tonne processing facility with fine grinding technology as an integral part. Feeding into that is the underground with basically a priority feed basis. We expect that to get up to close to 700,000 tonnes per annum. Make-up capacity will come from the tailings. So this is a bit of a perfect fit. Two decoupled production sources with the operational flexibility to ensure that you maintain maximum utilisation of your processing plant. As I said before, the plant that we've got designed here through GR Engineering is very similar to the flow sheet that was utilised for the previous 20 years, with the principal difference of just being the fine grinding technology, which has come a long way since the operation closed. Infrastructure, this is just second to none. Very supportive community. Access is bitumised roads from about 200 to 300 metres from the plant site all the way through to Sydney, Port, wherever you want to go, on some of the best roads in Australia. Power, we've got New South Wales State Grid. Port, underutilised concentrate berth at Port Kembla, 211 k's away. Water infrastructure's on site, 430,000 people within 55k radius of site, so it's a drive-in site. We are permitted. We do have a renewed mining lease, so we're in a very good position to move on. Sorry, I'm rushing a little bit because I'm just getting the hurry up. The last benchmarking slide shows the EV per pound of zinc equivalent. We're very, very cheap. Unusually, we've got quite a bit of cash for a company in our position. There's some broker price estimates there. These are all uncommissioned and independent valuations or views. Take them as you please, but certainly showing that there's considerable value for potentially for people in our stock. Zinc, strong story, strong market. We've got a high-grade asset here, long life, and we expect that to expand. PEA, certainly a milestone document for us for getting the underground advanced, and certainly developing a compelling business case to see that move forward. We're a few months into the feasibility program. It's a 12-month process, first half of next year. Project in certainly amongst its peers, this is a very short lead time. We do have some early start potential as well. Discovery potential underground is certainly fantastic, and regionally as well. Great jurisdiction, excellent infrastructure. We are fully funded through the next phase of work, plus some. And just a final comment on the Greenstone transaction. Certainly a strategic investor is certainly seeing value in our stock. So that's where I'd like to leave it, and thank you very much for your attention, and happy to take any questions, but you can also see it as booth 4 with a fly-through and some core.